Everyone. Greetings, everyone. Thank you all for joining me this evening. My name is Kumar Singh Deonanan, and I work as financial analyst at FinClub. So this evening, I'm going to share with you all how exciting peer-to-peer lending is and how it can help you diversify your general investment portfolio. Please note that this is the first among a series of webinars that we have planned for you guys, whereby we'll be touching on different aspects related to peer-to-peer lending. So without delay, let's dive in the agenda. We'll first explore how peer-to-peer lending works, then touch on the differences between peer-to-peer and traditional banks. Finally, we'll discuss in detail how peer-to-peer lending helps in your general portfolio diversification. I'm sure you'll be all having plenty of questions, which I'll happily address at the end of the session. So, peer-to-peer lending is a terrific method to diversify your investment. The only requisite is that you choose a well-established intermediary. Operational since September 2021, Finance Club or FinClub, right, is the first actually peer-to-peer fintech to secure a peer-to-peer lending license from the FSC Mauritius, right? So this is a bit of background related to the company. So let's start with how peer-to-peer can be a smart investment option worth considering. You see, the concept behind peer-to-peer lending is to connect credit-worthy borrowers seeking loans directly with lenders. Those lenders can be individuals, companies, groups, and so on. And the borrower also can be individuals, groups, SMEs, and so on. So at the moment, FinClub, we only deal at the individual level, but will soon be incorporating corporate borrowers and institutional lenders on our platform. So as you can see, the idea of and also, oh, I forgot to mention that peer-to-peer lending is not something new. It's already a popular form of alternative investment and financing around the world. You see, it started way back in the UK, back in 2005, 17 years ago, right? And we are in 2022, 2021, we got the license. So it's already picked up a lot of volume and across the world, across different continents and so on, right? So as you can see, the idea of peer-to-peer lending is to connect lenders and borrowers through online channels. A peer-to-peer intermediary does this through a website. So FinClub we do it like this. So that's our website, finclub.mu, right? Well, as you can see on your top right corner, right, where people can register either as borrower or as a lender, right? So once the borrower makes his application, we'll process it, determine the credit worthiness, and then decide to post it on decide to post the loan on our website. So it goes on like this, right? This is the live loan tab. You can see publicly available on this section as of today, right? You have several loans, right? Right now, around 30 loans of different categories, profiles, and whatnot, right? So as a lender, you have the choice. Remember well, you have the choice on which loan you want to invest and how much you want to invest. So on which loan and how much you want to invest. So the great thing about FinClub is that you can invest as low as 1,000 rupees, right? 1,000 Mauritian rupees, you can go invest as low as that. and as high as 20,000 rupees on a particular loan, right? So as you can see, it's an interesting online marketplace for investors and borrowers to connect with each other, and definitely for investors to create amazing investment opportunities. And also know that your investment can be as high as 1.5 million rupees over a period of 12 consecutive months. Okay, so sounds exciting, right, guys? So all so you may be asking, what next? So all you need to do is register. It takes a few clicks, and it's a four-step process, right? You register on your smartphone or your PC, get verified through a video call, you fund your account, and start investing. And once you invest on a particular project, so you'll start getting your monthly repayment regularly. So for example, if you decide to fund a loan, let's say of 10,000, right, over a duration of 12 months, so you'll be receiving a monthly, and we call that an EMI, equated monthly installment. So you'll be receiving a fixed EMI of, let's say, 464 rupees for the next 12 months. And that EMI, that 464 rupees, right, it includes a portion of your capital and your interest as well. So, and now, moving on, how is peer-to-peer lending different from traditional banks? So when you think about it, really, peer-to-peer lending is not something new. Actually, it's one we can argue that it's one of the oldest profession in the world, which is you lend people money when they need it for various purposes, and the person will pay you back the money with interest, right? Now let's relate to the modern context and with respect to banks. So from a lending perspective, if you have a bank account, I'm sure you must be having a bank account somewhere, right? So in perspective, well, you have always been a lender. Yes, you lend money to the bank in the form of a savings account, a current account, or a fixed deposit account, right? The bank then gives you a little interest. Right now, interest rate is like 0.65%, which is like really, really low, right? But now, when you lend money to the bank, now what the bank does with your money is not of your concern, right? But really, what the bank does is that it it lends that money to other people, right? To people that need it in the form of loans, business loan, personal loan, or whatever, unsecured loan, and so on. However, you're not exposed to that part of the equation, and you don't know, and you don't know for which purpose your money is being used for, right? But with FinClub, with peer-to-peer lending, you, as the lender, you choose on whom you want to invest your money. You choose on whom you want to lend your money, and for which loan purpose you want your money to be used for. It could be for a medical emergency. It could be for education expenses, or an emergency expenses, housing renovation, and whatnot, right? On our platform, right, our lenders have access to it, right? They know the loan purpose before they choose to finance a loan, right? So, uh, as you can see, we facilitate the lending, right? Just a summary, and you know the earn purpose of the money you have lent. And thirdly, uh, peer-to-peer platforms can reduce overhead costs. That's because of the tech-based processes built on analytics and data-driven models. So in contrast to traditional banks, these platforms, right, we can pass on the advantages to the final consumer. So to the lenders, they earn better returns, and the borrowers, they get access to finance to money at cheap and competitive interest rate. And of course, since you choose on whom to invest, which duration you want to invest, and so on. So by default, it makes you have full ownership of your investment. We'll now touch on the third part of today's webinar, right? So how how does peer-to-peer investing helps with your portfolio diversification? So earlier, when it came to investing, people turn mostly towards conventional savings and fixed deposits and estate investment, right? Especially in Mauritius, buying land is something quite trendy, and it's like the most general and advice you might get from your parents: buy land, that's the safest, right? But they don't know that there's a huge initial capital cost associated with it, right? The notary fees and whatnot. So, as a matter of fact, you can say investment can be classified into traditional investment and alternative investment broadly. Now, so as traditional investment in Mauritius and a bit around the world, right? So in Mauritius, in the Mauritian context, particularly, you have equity, you have bonds from the Bank of Mauritius or corporate bonds, you have real estate, which we just touched upon, gold, wine, right? But as now, the most interesting part comes of obviously the alternative investment one, right? So, with the advent of digitalization, there came the need to look for a new age alternative solution, right? The reason behind was to diversify one's portfolio and achieve high consistent returns. This led to the introduction of peer-to-peer platforms, peer-to-peer lending, as an alternative and smart investment form, among many others. Now you have crypto, collectibles, and whatnot. Okay, so we'll be focusing more on peer-to-peer platforms now, right? And let's see a bit what are the features, what makes it really to diversify your portfolio. So moving on, how does peer-to-peer investing helps in portfolio diversification? When we say portfolio diversification, we refer to your overall portfolio. So it could be including stocks, bonds, cryptos, mutual fund, and whatnot, right? But so in the general form of it. So first is the small investment ticket size, right? So with peer-to-peer lending, especially with FinClub, there's no need for significant capital investment to begin developing your P2P lending portfolio. A new investor can start with a reasonable amount of 5,000 Mauritian rupees, right? 5,000 Mauritian rupees can kickstart your investment journey and gradually raise the size of your portfolio thanks to the availability of small investment ticket size. What I mean by that small investment ticket size is that indeed our investment product is really simple. Those are like us. Our investment product are basically small personal loans, which vary from loan size of 20,000 up to 100,000 rupees over a duration of 3 to 24 months, right? So also small investment ticket sizes, right, gives you that amazing flexibility to decide on how much you want of how much of P2P investment should go to your general portfolio, right? You can easily manage the allocation percentage. That is, should you want P2P investment, 20% stock, 70% bonds, or 20% peer-to-peer, 10% stocks, and so on. Like you can manage it quite fast, and it's very simple. You get that amazing flexibility, right, in deciding that allocation compared if you had stocks or bonds, because for example, if you had bonds, you'd want to wait for your bonds to mature after 3 4 years and so on. Or if you had stocks, you most likely want to have a good exit point, right? So with small investment ticket size, you have that flexibility, which really adds a genuine touch to your general portfolio. Secondly, well, that's one of my favorite personally about peer-to-peer investing, because P2P investing has low volatility and correlation, right? With FinClub in particular, our peer-to-peer lending can be fully AI based or manual or both. You choose, right? Because we have an auto investment tool, right? So you set your preference, your criteria, you set the amount you want to invest, and the AI tool, it will make the placement of such funds on your behalf, right? So such processes ensure that the risks are mitigated and you don't see large fluctuations in your investment, right? It is, and also we talk about local correlation here, right? So it is unlike any other market linked investment, which makes it a very attractive asset class in both market upswings and downturns. Uh, Coming back to the local correlation thing, so peer-to-peer lending has shown to have a low correlation with other assets such as equities or bonds, right? So resulting in an increased diversification when added to your general portfolio. Thirdly, compounding. So peer-to-peer lending with FinClub as your chosen platform, right, allows you to generate sound returns up to 12.05% per annum. You have the complete freedom to choose the time frame for your investment with a maximum of which can go to a maximum of 24 months, 3 to 24 months, right? You invest your money today and it stays invested throughout your investment time frame without you having to do anything, right? So basically, you choose, for example, you choose to fund a loan of a duration of 18 months. So each month you'll be receiving a fixed monthly repayment, which we call EMI, right? So you'll be receiving your EMIs for the next, in this case, for the next 18 months. But most interestingly, right, you have three options. You can let the money accumulate on your dashboard. You can withdraw the money at zero cost, but most interestingly, you can use that same money and refinance and finance other loans. So you reinvest your monthly returns and reap the benefits of compounding on your investments. Lastly, peer-to-peer investing gives you a high over your investment, right? Because when we talk investment, right, we talk also about risk, and every investment has a certain degree of risk, has a certain specific risk associated to it. And obviously, peer-to-peer investment, when we talk about peer-to-peer lending, the the risk which is most common is default risk. This is the greatest risk associated with P2P lending, right? However, we are able to mitigate this risk through our established risk procedures. It comes twofold. So I'll just give you a brief overview. Later, we'll have another webinar, right, on how we can mitigate risk and so on. So how do we mitigate risk here? So first, we have a robust compliance module through our FinScan, which develop in-house. Secondly, importantly, we have a robust credit assessment, which we do on our side. Right, it starts from the MCIB report, which we extract from the Bank of Mauritius, relevant bank statements, and so on. And thirdly, we have so those two itself, right? Through these established risk procedures, we determine three main things, right? First, it's the capacity to repay. Secondly, it's the willingness to repay. And thirdly, it's the financial stability of the borrower. Okay, so we do all the assessment, and also that's how we mitigate risk on our side. Now, interestingly, the lender also can choose to mitigate risk on his side. Mainly, we have our investment ceilings, right? So you might recall that I mentioned that you can invest as low as 1,000 and a maximum of 20,000 on a specific loan, right? So the rationale behind the reasoning behind rather is to encourage our lenders to diversify their portfolio. So if you have a budget of 100,000 rupees you wish to invest, so instead of putting 100K straight on one project, no, the platform will not allow you to do that. You'll be able to put maximum 20K, 20,000 on a specific project. That's the maximum. And so by creating that, you can on one end of the spectrum, you can have like five different projects where you invested 20,000 rupees each, or on the other end, you can have 100 different projects where you chose to invest 1,000 rupees each. So you can buy on five loans, or you can choose to diversify on 100 loans. That's that's amazing, actually. So you can reduce risk on your side as well through diversification, right? And most importantly, you, even though we do the credit underwriting and it goes on the credit risk committee and a risk category is attributed to a borrower in particular, we also disclosed part of the methodologies which went in our credit underwriting. So that's why, as a registered lender, right, on your dashboard, you have access to a detailed borrower profile where you can where you'll be able to see the debt to income ratio of the individual, the job title, the years of experience at the current company, and so on. You have so many information detail, and basically to enable you to take a well-informed decision, right, before proceeding with an investment. So high control of your investment, right? It gives you complete freedom to choose, right, and access to a detailed borrower, and also well, ensuring that when you fund a loan, you sign a loan agreement as well, which is done digitally online, right? So those legal agreement between both parties, the robust creditworthiness check that we do, the robust repayment and tracking recovery process that we have, and among many others, are some of the steps laid out by Club to emerge as Mauritius' trusted P2P investment partner. So, moving on, definitely, you have also one of the other benefits of associated with peer-to-peer lending is the income tax incentives, right? So you are exempted up to 80% of all interest derived, and out of the remaining 20%, you are taxable only 15%. So at the end of the day, your taxable income boils down to only 3% of the total interest earned, right? And well, below are some of the other rules which goes on, because it helps you also mitigate when we talk about mitigating risk as well, right? So there's a provision in your income tax return to cater for your losses in case there are some like delinquent loans, right? But right now, it should also be pointed out that the default rate at FinClub stands at 0%, right? And we intend to keep it that way, definitely. Moving on, so as a summary, right, as a recap about the benefits that a lender has. first we talk when we talk about investment, we tend to think about the fees, right? So, well, good news, guys, we don't impose any fees on our lenders. So no withdrawal fee, no management fee, no whatsoever fee. It's free. Why? Because we can, as I was mentioning before, because we are a tech platform, so we can, the orders reduce overhead costs, we can pass it on our borrowers and lenders as well. So lenders, no fees, and you can invest as low as 1,000 rupees per loan, which is great. The tax exemption, third amazing point. Also, the ability to reinvest your earnings and benefit from compounding, the access to the detailed information on the part of the borrower, and also our established risk mitigation procedures. Right. So, one also to come back a bit about peer-to-peer investment in your general portfolio. We I don't mean to really the make the case for coming back here for traditional investment being the bad guys. No, we always need to have them in our portfolio. But what I want you to realize, especially through this platform, is that peer-to-peer platforms, peer-to-peer lending, especially with FinClub, is an amazing is and will be an addition, right? An amazing addition to your portfolio. It's it's definitely something not to miss in your portfolio. And as I was mentioning before, the small investment ticket size uh, gives you that flexibility to incorporate any desired percentage of your portfolio to peer-to-peer platforms. Should you wish it to be 10%, 20, 50, and so on, it's up to you guys. You have the choice basically, and you have that amazing flexibility. So portfolio obviously should consist of a diverse asset classes when we talk about shares, bonds, and so on, but also about peer investment uh, for the following reasons: the low volatility and correlation, the compound return, and all these benefits associated to it, right? This sums up my webinar for today, where we talked about how P2P investment helps you in diversifying your general portfolio. That was the first part of our webinar. We have the next series. Well, I wanted to keep it a suspense, but the next series will be more about risk mitigation, where and portfolio and your peer-to-peer portfolio diversification, right? Here we talk about diversification as in general in your whole portfolio. Now, for the next series, we'll touch on how about your specific peer-to-peer, how you can diversify and create an amazing portfolio in itself. Okay, so that will be on our second webinar, which will definitely share the details with you soon. And now, it comes to my favorite portion of the webinar, where I would love to hear your questions and answer them. So just a minute, my team is just noting up the questions, and I'll be answering them shortly. So even with diversification, the risk still. So we have a question from Kevin. Even with diversification, the risk still exists. As a lender, how can we mitigate the risk if a borrower defaults payment, right? So, uh, well, first, as I was mentioning briefly, the risk is mitigated twice, right? Once before it gets posted on the platform itself, okay? So it goes by the robust credit assessment and so on. But secondly, you as a lender, right? As a lender, how can you mitigate the risk? Well, the key word when we talk about mitigating risk and portfolio is it's really about uh, diversification, and you can diversify as low as 1,000 rupees on. You can invest as low as 1,000 rupees on a particular loan, and a maximum of 20K on a loan, right? And even now you may so that's part of it right now. We are coming up with some other schemes to really create that comfort to our lenders, right? But suppose should there be as Mr. Kevin rightly pointed out, if a borrower defaults payment, right? So there's that very established repayment tracking process. Okay, we well let me share with you the the repayment tracking process. Bear with me for a few seconds. So right. So it's a very established procedure at FinClub, where first the person, the borrower, see when we do the loan agreement, right? There's the standing order. We demand that every payment goes by standing order. You can see on step 5 here, it should go by standing order. Now, moving on to the tracking process. So even 5 days before that standing order is due, right? 5 days before the payment, there are notifications, email, SMS, which is sent 2 days before, a gentle reminder. Now, suppose there's like 1 day overdue, 3 days overdue, and 7 days overdue, right? So there's all that email, SMS, directly phone calls, right, which is made to those borrowers, try to find out like when why the payment has not yet passed, and so on, right? So yes, to be honest, our sorry, we are very proud that first our default rate stands at 0%, but yes, we do have like sometimes two days late payment, but that's understandable. Sometimes there's like a standing order which was not clear by the bank, and so on. Those things happen, but the most important part here is that we receive the money, the borrower received the money, okay? And obviously, for all those days of lateness, of overdue, there's a penalty fee which is generated, which goes directly to the lender and compensates him or her, right? uh, Now over 60 days, we do well, straight away a visit to the borrower, okay? Try to determine the cause, if there's means of rescheduling, and so on, right? And but most important here also behind is that, see, as long as those arrears are being recorded, right? Since we report to the Bank of Mauritius, right? That person's MCIB report, which we call the credit report, is being affected, is being tarnished in a way. So by it will accumulate and become a non-performing loan at one point. And see that person, since our loans are very small ticket sizes, I was mentioning 20 to 100 200,000. So that person is bound to take a loan again at some point in his life, right? But when he will go to some other financial institutions, he most likely will be refused straight away there, because they will see on his MCIB report that he has a loan like that has a significant area with FinClub. So, so inevitably the person will be bound to come back to FinClub and repay the loan, and thus the lenders will be most likely getting back their money. But definitely we do make, even though we have a 0% default rate, we still have that provision, right, of a person really seriously being a serious delinquent, right? So we have definitely legal action that we can undertake against the borrower. Yes, I'll take a second question. Okay, forgot to share my screen. I'll just show you the repayment tracking process. Okay, so this is the repayment tracking process. My bad, I forgot this part. So this is, yeah, this is the repayment tracking process, where uh, the person, as I was telling, get 5 days before repayment, he gets his notification. 30 days, there's an official letter, legal letter, which is served to the client. 30 days, 60 days overdue. As you can see, there's a visit to the borrower which is made, 90 days overdue. Again, a letter and a visit. And remember, I was talking about his MCIB report being tarnished. So here it is, over 60, over 90 days due. We can already take that. And definitely in the worst case scenario, we can definitely undertake legal action against the borrower. So my apologies, I forgot to share the screen, but that's it. All right, I'll take a second question now. Um, so, mm, how many borrowers can I lend money to? Okay, that's an interesting question. Well, as many as you wish, right? As long as the total investment that you make, sorry, that's a question from Mr. Atma. He's asking how many borrowers can I lend money to? Well, first it depends on the money you have available on your bank account. Sorry, on your dashboard, and also the amount that you invest over the next consecutive 12 months should not be exceeding 1.5 million rupees, right? That's from the regulatory authorities here. Yes. Hope I answered that question of yours. So come on, guys. Feel free to shoot your questions. Um, what I'll do meanwhile also is that let me share with you my details, right? So that you can, well, this time I'll ensure that I share my screen. So I'll share with you my details so that should you have any question, you can definitely send me an email or call me directly, right? Because uh, well, this is my email address and my personal WhatsApp business number here. So feel free, should you have any questions later trotting on your head, so feel free to reach out to me on WhatsApp or via email. I'd be most happy to assist any of your questions, uh, anything regarding peer-to-peer investment. So let me see if we have perhaps one last question. Okay. So okay, one interesting one. So who will bear the legal cost? Is it going to be FinClub or the lender? Well, uh, we act as a facilitator, right? We act as a facilitator during your whole legal process, right? We have our legal team, which we can, and also our legal contacts, which we can refer to. So in that case, right, the matter has been referred to a solicitor for recovery action, right? So the solicitor attorney generally charged a certain percentage on the amount recovered, but basically to answer the question, who bears the legal costs? It is the lenders. It is shared between the lenders, right? Straight answer to the question. The lenders share the cost of the legal proceedings, right? Do we have any other more question? Do I have to pay? So we have one more question, which is like, do I have to pay any registration fee upfront? Well, no, no fees associated for the registration process. Okay, it's all free. You just have to go on finclub.mu, click on register as a lender, right? So you have to create your own personal account and fill in the your details and upload some basic documents, right? Basic KYC documents, and well, you get verified through a phone call. It's a compliance measure, and yeah, your profile gets activated, and you have access to your dashboard. And the withdrawal fees, well, zero fees. Okay, no fees. So even if you want to withdraw the money, you can do it at any time. Okay, uh, so there's no cost associated to that. Okay. One more question I can see here is that how much can I lend? So per project, you can lend as low as 1,000 rupees and as high as 20,000 rupees. But overall, right, over a period of 12 consecutive months, you can go until 1.5 million Mauritian rupees. Yes. So okay, the questions are starting to flow in right now, right? So, what is the minimum amount to start funding loans from my dashboard? Okay, so the interesting part I was telling you again in the perspective to diversify and so on. So the minimum being 1,000. That's amazing actually because it helps you to mitigate that default risk. Okay, and enables you secondly to create an amazing portfolio, right? So instead of having your money on a single basket on a single loan, you have your money split, diversified on 5, 10 loans or anything as per your preference. So the minimum being 1,000 rupees to fund a loan. But yeah, here I would like to draw your attention to something. So to kickstart your investment journey with FinClub, okay, so you're required to to invest to do fund transfer of a minimum of 5,000 rupees, right? So you can start your investment journey with FinClub with a minimum of 5,000 Mauritian rupees. Well, we have one more question. So, what if we are not satisfied with the services offered by your legal team? Well, you can definitely appoint your own legal team. That's not an issue. That's not an issue. You may appoint your own legal team. Yes. So one last question: who gets the penalty fee for late repayment? Well, it goes directly to the lenders. FinClub, we don't get any part of it, right? It's the lenders who gets compensated, and they get the whole penalty fees. And I should also draw to the attention that this penalty fee, right, it's generated on a daily basis, right? Ah, okay, that's an interesting one. So if a lender invests in a project but decides to withdraw midway, what are the implications? I repeat. So basically, the person is like, as an investor, I invested in the project, but midway I have a change of heart, change of mind. I want to withdraw. How to do it? What are the implications? So it's very simple. So at any point, so when we post a loan on our website, it has 30 days to get financed, to get funded. Okay. So suppose on day two, you invested 10,000 rupees, and let's say on day 20, you wish to withdraw the money. Okay. So you can do so. You just send us an email, right? You just send us an email, and we'll do the reverse funding. And the money which you invested, say 10,000 in this case, it goes back to your dashboard, to your available balance, right? Simple as that. And also, interestingly, when you fund a loan, okay, and it gets funded 100%, there's like so it gets funded 100%. So now every lender, every investor on the project is required to do an e-signature to sign the agreement. Okay, we wait for the last lender to sign that agreement to start a cooling off period. This is something mandatory by which is required by the FSC, right? So there's a mandatory cooling off period of 2 days, okay, during which those 2 days, if you wish to withdraw the money even after having signed or before signing, you can withdraw the money again through an email, formal email which you send to FinClub. So yeah. So after the last lender, so suppose there's a project, right, and 8 investors funded that project. So all the 8 investors will be required to sign the project, to sign the loan agreement. Sorry, and after the last investor signed the agreement, okay, it goes in a cooling off period of 2 days. Okay, after those 2 days, the loan amount, right, is disbursed, right, to the borrower. Simply. So that's a great question, Mr. Kevin. Thank you for that. So do you have more questions? So I guess that's it. Thank you everyone for your time, especially on Thursday evening. While this Friday is just one day away, and having a great evening ahead. And well, feel free to send more questions or contact me on 52557413. Right, 52557413. That's my personal number, which you can reach out to me anytime. Okay. Uh, thank you. Thank you, and have a good evening ahead. Bye.